Well, good afternoon. Welcome to the first Master of the Margin series, Financing Your Pharmacy Business with First Financial Bank this afternoon. I'm Alan Sykes along with Scott Sykes. Today we have with us Bo Garman and Drew Heggai, who I'll let introduce themselves in just a second from First Financial. Sykes & Company is happy to sponsor these series of webinars again in 2022. Our intention here is for this to be conversationalist and for allow you to ask questions through the Q&A question box there through GoToWebinar. Feel free to pop any of those in as you can. Our firm, Sykes & Company, is a firm that works exclusively with independent retail pharmacies across the entire country. We're approximately 50 people. We provide cloud-based accounting services, tax mitigation, tax compliance, advice and consultation with pharmacies only. And again, it's our pleasure to be with Bo Garman today and Drew Heggai. And gentlemen, we will hand it over to you for your introduction.
Hey, we're happy to be here. Thanks for having us. Thanks for the invitation. And always a pleasure when we get to talk about financing and pharmacy and entrepreneurship and the ins and outs of SBA loans. So hopefully we'll cover everything you need to know to take out a loan for your pharmacy business. If we don't, answer your question or if you got questions, feel free to chime in and maybe we'll have a time at the end to do that as well. But my name is Drew Heggai, like Alan said, pharmacy loan officer for First Financial. Bo and I've been doing it about almost 10 years. We'll hit our 10-year mark this year. So we've seen lots of different things, lots of different scenarios, and hopefully got experience that can help you navigate pharmacy ownership from a financing standpoint. Bo, you can introduce yourself and then talk a little bit about the bank if you want to.
Yeah, hey, glad to be with you guys. Again, Bo Garman. I'll get started here and we'll get moving. Tell you a little bit about who we are and what we do. First Financial Bank was we've been in business since 1934. We're headquartered out of El Dorado, Arkansas. Still locally owned and managed, and we have specialty lending divisions that serve our customers nationwide. One of the top SBA lenders in the country. We have preferred status with SBA, and we got started, as Drew said, in the pharmacy space a little over 9 years ago. And I'm proud to say that we are one of the premier lenders for pharmacies in the country. So our team, Drew and myself, are out in the field as loan officers. We cover the country, coast to coast. Drew is actually a owner in a couple of pharmacies himself. We're fortunate enough to have Bob Grawl on our staff. Bob works with us as a consultant. Bob is a pharmacist and owned multiple stores out in California until he sold those, and then actually spearheaded an RX ownership program with a major wholesaler. So he's worked with buyers and sellers to transition hundreds of stores over the years. So with all that said, we've got multiple years of experience, and maybe it depends on what day you ask me, but I think we know what we're doing. And then lastly, our level of service, I think, is what sets us apart. We kind of pride ourselves into providing that same one-on-one service that you do for your customers. We try not to give you a list of names and numbers to pass along. We always tell people, Drew and I will give you our phone number at the beginning of this process, and that's really the only number you'll need. We'll stay with you throughout.
Bo, you might want to just mention the significance of the preferred SBA lender situation vis-a-vis.
I think we'll touch on that here in just a minute.
Sounds great.
So what do we offer? Really, you can call us with any financing need you may have for your business. 80% of what we're doing is acquisition loans, where you're buying an existing business, either an asset sale or stock purchase, membership interest purchase as well. But that's probably 80% of our volume is helping pharmacists buy existing stores But again, like I said, we'll do anything and everything that you may have a need for. May not be a good fit, and we'll tell you that if it's not. Some equipment financing we've done in the past. There's also some other outfits that more specialized in those, expansion remodels. Our average loan size is about $1 million, $1.5 million. So on some of the smaller stuff, there are companies that are better geared for those type. If you're buying, pharmacy robotics, there's some other options out there, and we're happy to help you and get to the right place. But business refinancing, something we do a good bit of. Wholesaler debt, if you happen to borrow money from one of the major wholesalers, and they do lend money, on a regular basis. A lot of those loans, have balloons. They're 5-year terms, and so we can refinance those. Also, accounts payable. We've done some of that with some of Sykes' customers as well. If you need some cleanup on the business balance sheet on the liability side, any type of refinancing, if we can find eligibility with SBA, if they'll allow it, and there are certain rules that are out there, and we can talk more specifically about that if you have a need. But more times than not, we can get a refinance accomplished outside of if you have an SBA loan. If you got an SBA loan, SBA really doesn't want it being refinanced into another SBA loan just because the terms are going to be somewhat similar. But any other debt that you may have, a lot of times is eligible. We're still putting several startups on the books from a lending standpoint each and every year. I did a handful of them last year. We will underwrite these probably, more diligently than we have in the past, because margins, you got to have volume, and we got to make sure that you're going to get volume quickly and ramp up quickly, and you have a good marketing plan. Competition will evaluate all that, but we're still doing plenty of startups. And then working capital loans, we'll do a handful of these every year to help fund growth or expansion into other pharmacy segments. If you've had an influx of patients and business and revenues are going up, sometimes your cash flow can be off a little bit. A working capital loan would be beneficial to you and your business, then we can certainly do that. It'll all be through the SBA. I think our next slide talks more about SBA financing, and Bo, tell us more about that.
Yeah, so a lot of pharmacy owners and potential owners are taking advantage of some loan programs offered by SBA or Small Business Administration. These programs are offered through participating banks who partner with the SBA to lend money to small businesses. The loans they're commercial loans, but the bank in which the bank actually lends the money to the small business. The SBA then provides a guarantee to that lending institution based on guidelines set forth by the SBA, and those guidelines are going to be consistent through any banks offering SBA loans. The banks do have a little bit of flexibility when setting rates that are offered, but as Alan talked about earlier, one thing I would strongly encourage you in looking for an SBA lender, that you find one that has PLP status or is a preferred lender participant. These are typically banks that do a larger volume of SBA loans and are more familiar with the guidelines, but most importantly, they are able to issue approvals in-house and not have to send that file off to SBA for their approval. So that can greatly reduce the amount of time it takes to get funding.
Alan, you know that to be true, right? On the PLP status. I mean, you got to have.
Absolutely. We run into a number of situations from time to time, Drew, where pharmacies are dealing with local banks that do not have this PLP treatment, and it becomes a nightmare situation. The amount of time that it takes to get approvals and things of that nature, I can't imagine a pharmacy doing a loan without being involved with someone like yourself who's not a preferred lender of the SBA. It just hastens the entire process and makes it a much smoother and quicker transaction without question.
Well, not only that, Drew, Bo, I mean, you guys specialize in pharmacy, so that has to make a huge difference as well. You want to chime in on that as well?
Yeah, I think so. I mean, we just have 10 years of doing it. You've seen a number. You know how the deals need to be structured. You know what needs to happen in terms of how the stores transition. I mean, and then I've owned stores for the past 7 years, so I mean, there's some ownership experience there as well that we think lends well to helping consult our clients and our borrowers successfully get into ownership. So that it's nice to have for us. I know Bo and I enjoy it. Being able to just focus on one industry makes us better at our jobs, I think.
Certainly.
I won't spend a lot of time on this next slide. It's just what is SBA considered small business? So is my business a small business? So it goes by industry code, and pharmacy has their own industry code. 446110 is that code. And the size standard, if you're under 30 million in revenue, which goodness, 98% of all pharmacies in our country probably are under 30 million in revenue. You guys probably have some that are over that mark, but
yeah, we actually we do. Sometimes we're running into specialty pharmacies or entities that have. I don't know how that applies to entities that have multiple stores, where obviously the aggregate sales can clearly go more than 30 million. But in today's environment, it's especially with COVID the last couple of years, revenues have really popped up, and occasionally we see this without question.
yeah, I think it's NCPA data will show that average revenue for independent pharmacies around 3.5 to 4 million.
Yep.
$4 million, but and that to be considered small per SBA, under 30 million in revenue. But then there's even if you happen to fail that, say you do 35 million, there is an alternate size standard test that you can move to, and as long as your tangible net worth is less than 15 million and your net income is less than 5 million, then you still can qualify. So even though they have that 30 million number out there, you can fail that one, but somehow still qualify with if you pass those other two tests. So worth the conversation either way, but more times than not, we're not up against trying to get these things in an eligibility small business standpoint. They're usually qualifying.
Sure.
So this goes right into what you guys were just talking about. Takes a snapshot of what community pharmacy today looks like based on the 2021 NCPA digest. It's estimated there's a little over 19,000 independent pharmacies in operation, and it's a $67 billion marketplace. It's interesting to think about. It's estimated that about 1,000 of those will change hands each year. As Drew mentioned, the average size is right at that $3.5 million in annual revenue on 57,000 annual scripts. And then gross margins, 21.9% is what we're seeing there, which is down a little bit and probably continuing to shrink. Data also suggests that people still like dealing with an independent versus a chain. And that's just based on the service levels that they see there, and really don't expect that to change. Our average owner is over 60 years old, so that tells us that there could be many more opportunities out there for people looking to buy as those owners look to retire. And then I think very interesting to note is that the average store owner owns more than 2 stores. So there's a lot of multi-store owners out there, and that number seems to be growing as well.
Yeah, and I think coming through the COVID situation here, it's going to be interesting to see in 2022, guys, what kind of transition we do see, because a lot of folks are getting burned out with COVID and vaccines and the hours they're putting in, and the fact that they're trying to find employees to fill gaps and the hours they're trying to be open. It's going to be really interesting to see what happens here in the next few years here on the transitional aspect of this. But the owners are clearly getting older and older, and they're holding on longer and longer. And many of these independents have really tried to take care of their patients extraordinarily well during this COVID crisis. They've expanded their revenue strata from the terms of whether it's COVID testing, PCR testing, vaccines, immunizations, whatever the case is, but anything that they can not have DR fees over. Many pharmacies are trying to bring in that incremental revenue, and we frankly are seeing pharmacies in some cases in the best shape they've been in some time, even though DR fees are hitting them harder and harder, and gross margin pressures are getting tougher, as this NCPA digest slide suggests. So it's an interesting
Probably,
dichotomy of what's going on in the profession.
I'm guessing you're seeing a lot of these businesses that are flush with cash now too, after the PPP and the IDL program.
Yeah, we are. That's the one interesting thing about it with the HHS program, with the PPP 1 and 2, with EIDL expanding what they did last fall, allowing certain debts other than SBA debts to be paid off. And again, with COVID as it's been, we've got many pharmacies that are in the best cash position they've been in some period of time. And I know at the NCPA show last October, there were more vendors there than ever before, and I have never seen pharmacists buy technology at the clip that they did, guys, with the idea of trying to fill that gap for employees they cannot find and to get more efficient at what they're doing in offering services in the pharmacy. So that continued all during the fourth quarter. And in fact, we began to see towards the latter part of the fourth quarter where certain vendors could not deliver what had been sold. Certain pharmacies had tax planning opportunities exacerbated by the fact that that equipment couldn't be delivered. It was just a very interesting cycle here with the supply chain situation like it's been.
I'm curious, guys, have you seen a trend in maybe transition slowing down over this COVID period as pharmacy owners have been so busy and consumed by what, the environment we're all dealing with now, and just haven't had time to really consider a transition at this point. So have you seen maybe a slowdown, and you expect that to increase as maybe COVID becomes, as we move out of the pandemic, hopefully in the next year or two?
Yeah, I think that's a good point. I think certainly. I mean, you're sort of just trying to manage your business and take care of your customers and your patients, and you got a lot are doing COVID tests, a lot are doing obviously COVID vaccines and boosters, and certainly right now, I've seen lots of people that are just absolutely swamped and overwhelmed, and there's just not a lot of time to pull your head up at the end of the day. So, and I would say between now and spring break, that March 15th to April 15th, I mean, typically you'll see a lot of deals want to close at the end of the year, and there's always a rush to close kind of right around that January 1 timeframe. But then as numbers are getting finalized for 2021 and tax returns are becoming available, there's always somewhat of a lull in the first quarter as well. And so I think that's part of it. But COVID certainly has probably not given pharmacists and pharmacy owners as much time to look around.
Well, that and they're also hopefully trying to increase that cash flow as much as possible and build some income there and take advantage of it while they can, Right. But like we were saying, I mean, I've seen pharmacy balance sheets as strong as I've ever seen them from a cash perspective, current ratios, especially those that are doing those different services such as point of care testing and things of that nature. I mean, the revenue coming in from those pharmacies have really jumped on that bandwagon from the beginning is just really, it's astounding.
Yeah, it is. Tremendous opportunity for them, and it's been good to see a lot of them really taking advantage of it.
And one other thing that kind of ties into this whole community pharmacy concept is a recent announcement that CVS is going to be closing 900 stores across the country, 300 a year for the next 3 years, and the opportunities that is going to provide some of the community pharmacies to do either a backfill or pick up maybe some talent from some of these stores that are closing in some of the communities. But it's an interesting, it's just an interesting process, what CVS is going to be doing and the impact that that's going to have on community pharmacy. And we're already seeing it in that the clinical services aspect of everything that COVID has forced upon these pharmacies to get involved in, especially those that have been able to take advantage of it, is will probably be expanding as a result of that whole CVS change in their business strategy. So I think that's going to certainly provide you guys opportunities for business expansion, for some cases file buys with some of the older folks. And I know you guys do a fair number of file buys as well, utilizing the asset structure of an existing pharmacy that perhaps is profitable, and then buying files straight from a retiring member. You want to talk about that, any guys? Do you see much of that these days?
We don't see a ton of it. We you know, it's certainly out there. It's not certainly a high percentage of deals that we'll do, but had plenty of conversations about it. And sometimes it's, you know, they go ahead and complete the file buy and just need working capital to sort of service it. So, you know, and that's
I'm curious, Alan, how you guys would value a file buy, if you want to speak on that.
Well, yeah, it's really interesting because there's really two common ways of looking at that. One being really just free flowing of EBITDA on a recasted basis, which is taking the earnings before interest, taxes, depreciation, and amortization, and recasting that for an owner maybe that would no longer be around, to see really what the value of those assets are that are being sold. And sometimes when there's not that even, I'm sorry?
Would you discount that if it's, for instance, buying the files and moving them?
You're generally going to see a factor of about 3x, give or take. We don't generally see discounting on that, generally, but at the same time, we don't see premiums attached to that type of thing either.
I'm sorry, I mean a discount of, all right, we're gonna buy these files and move them across town. Well, you're not going to retain all of that.
No, you're not. No, you're not going to retain all of those. But generally speaking, if you're looking at a situation where something is moving across town, depending on the distance involved, you might see just a pure per script type of number attached to that also as an option versus an EBITDA on a recasted basis arrangement. But certainly that's up for negotiation and discussion between the buyer and the seller. Obviously, if a big box is coming in buying, as we see sometimes the community pharmacies files, they certainly will provide arrangements in that contract for there to be discounted amounts paid based on retainage of certain script volumes after certain periods of time, in addition to covenant not to competes that are added to the contract, which is taxed as ordinary income. So you need to be careful with that. But you see a little bit of everything, Bo, depending on how willing the buyer is to sell and the buyer is to buy.
And those big boxes, they'll mark up on the front end, but then they're clawing back on the back end. And so
Absolutely. It's nothing.
You got to understand that, because some people,
nothing like it is proposed.
Yeah.
Which sometimes gets independents really excited up front, but typically you're going to see an independent buying another independent getting a generally higher price unless there's some reason that a big box wants to come into a particular market and own that market and pay a premium, where we have seen that occur. I saw one occur a couple of years ago just beyond anything I could ever imagine, but that was an exception. Generally, they are trying to pay as little as they can, whereas an independent will typically try to be fair to a certain degree. But it's all about having your numbers available and having your numbers where they can be understood. And just like Drew said, you're always waiting for year-end numbers and tax returns to be available so that you can have that information in order to be able to do a transaction, which is why you need to keep your full accrual numbers monthly. And then for tax return purposes, you can do cash or accrual, depending on which is more advantageous for you. But if you don't know what your accrual numbers are each and every month, and if you're not adjusting inventory, receivables, and payables and cash monthly, then you don't have a clue what's taking place in your independent. And we're really adamant about that here.
Got a question here. If you're a multiple store owner, do they combine your revenues, or is it per EIN number to stay under the 30 million small business threshold?
Yeah, you would look at it from a combined sort of global perspective. So add those up, that'd be your total, if it's the same industry code, which it would be if it's pharmacy, then you're going to take all that. And but again, you can get over that 30 million global and still qualify based on that net income, usually alternate test.
All right.
So yeah, the last point was, average store owner owns just over 2 stores, and that's been our experience with the number of deals that we've done over a 10-year period. We've had we help a lot that are buying for the first time, but a lot of those first-time buyers in a couple of years will come back to us and buy a second store. And then we got some, closed one last week. I think they were on their 8th, and we helped them do 2 startups back in 2013. So that kind of thing happens, and that's what we want to be as partners for over the course of their career. Of course, you got the $5 million SBA cap that you got to pay attention to, but up until that point, we're a great lending partner to help you achieve all the ownership goals that you want to. Where are the best places to look for opportunities? Familiarize yourself with the wholesaler account reps. They're in your territory. I guess it depends on your geographical area that you're wanting to stay in. But a lot of times those reps will know, they're calling on the stores in your area, each and every week, and so they kind of know who potentially would be looked to transitioning out. Just be involved in independent pharmacy in general. It's hard to, when you're in the chain world, to really be networking with the right people. But obviously, a lot of our first-time buyers work at the store that they're buying. So if you can get to an independent, that's the ideal scenario. And then hopefully it's an older owner that eventually will want to sell to you. State associations, there's groups that you can be a part of. I know our state here in Mississippi has an independent pharmacy, association. It's its own little deal, and I know other states, Georgia and other states, have specific individuals that are dedicated to independent pharmacy. So you can hear of things and find out about opportunities that way. Don't be afraid to get out and visit stores, and then attend conferences. That's always a good way to meet people. And there's a lot of ways to do it, but NCPA puts out a pharmacy matching email as well that is always worth looking at and putting your name on, or reaching out to some of the people that got buyers and sellers listed on there. So that's an opportunity. Bo, you can tell us, next slide's planning to buy. What would be, I guess, the right approach and how to get yourself ready to buy?
Yeah, I mean, you touched on it just a minute ago. I mean, first and foremost is, where are you willing to acquire? How far do you want to expand your search? Are you willing to relocate, or do you want to stay in a certain area? The problem is, and like you said, I mean, you don't drive down the road and see a for sale sign out in front of a pharmacy. So you got to maybe get out there and knock on some doors and just ask. But a lot of these smaller markets, there just aren't any stores for sale. And if they are, there may be a reason. It may not be, good acquisition targets. So, that's something to consider. You need to be willing to move, or just be extremely patient in your search. Other things to look at, what kind what kind of size and volume are you looking for? Are there any specialized markets? I mean, do you want to look at a pharmacy that's involved in compounding or infusion or other specialty services? It's my opinion, my experience, that it's worth looking at higher volume stores. They just tend to be more profitable. And although they may come with a higher price tag, I'm always getting, people coming to me wanting to buy stores for a small amount of money, and there's not any revenue there. There's not any cash flow there. Alan, would you guys agree with that?
Absolutely, Bo. I'm adamant about you need to find a store that's the most expensive store you can find. And you might say, well, why would you say that? Very simply, as you just mentioned, the cash flow in that expensive store is going to be substantially higher than that smaller store that maybe you think you can, quote, afford. And what you may learn is that with those larger stores that are providing maybe more on the consulting side, more in terms of script volume, the cash flow available there and the payback on a loan could be a heck of a lot quicker than it would be for a store that you might pay, let's say, $1 million on. So I'd much rather find a store where I'm paying $3, $4, $5 million for than a store for $1 million, because if the numbers work out accordingly, you're going to have a lot more cash flow availability there and EBITDA ability than you are that smaller store that maybe only does 40,000 scripts a year. So clearly that's what you want to do. Find the largest store you can literally afford to get. And we'll talk about that affordability here in just a minute, I'm sure.
Yeah, and so that being said, don't go into it thinking, well, I could never buy a store that size, or I could never get a loan for that amount. We're going to underwrite the ability of cash repayment of that business. So don't let that scare you off. Next one, this one's really important, and that's building a team to help guide you through this process. You're going to want a good attorney, a CPA, a relationship with a wholesaler, and then a bank. And not only do you want relationships with those people, I would strongly encourage you to look to people that work in the pharmacy space and have experience with pharmacy, because we've done a lot of deals, and when there's a team that's built out, things just tend to go much smoother.
No question about that, and I would absolutely agree with you there that if you don't get an experienced healthcare attorney, a CPA who doesn't have pharmacy experience, if you're not dealing with business partners and banks that understand pharmacy, like a First Financial Bank who has a specialty in pharmacy, that you're really making a mistake on the front end, because there's so much knowledge to be gained by those that have extensive experience in this relatively small field. Keeping in mind, it's only about 22,000, give or take, independents in this country. And again, as Bo and Drew said earlier, there's about 1,000 transitions a year, which seems like a lot, but it's a relatively small field spread out through all 50 states. So having an experienced team there all the way through is extraordinarily important.
All right, next slide. Yeah. So yeah, as a buyer, it's important that you have a plan in place. You're going to want to make sure that you're prepared both financially and you understand the opportunity at hand. Obviously, you're going to want to make sure your credit history is clean and you have a good credit score. We typically like to see a credit score of 680 or better. We also, in most cases, are going to require that we have a pharmacist on the deal. So a borrower with a valid pharmacist license that's in good standing. Pharmacy ownership's not for everybody, but the ones that do well, and there have been a lot that have done well, they have a passion and a desire and an entrepreneurial spirit. So that's important as well. If you've got a mentor, that's wonderful. Somebody to lean on. If nothing else, maybe a seller that's that's willing to guide you and stay on and help you through the transition, that's always a bonus. You need to have some savings on hand available for a down payment. Most banks are going to require at least proof of funds for at least 2 months. We'll talk a little bit more about that later. And then just finding the right pharmacies for you. You've got to do your due diligence. You want to make sure that the pharmacy is valued appropriately, and that you feel comfortable stepping in and operating that pharmacy as an owner. Once that's done, then at that time you can negotiate with the seller, and hopefully you guys can come together on with an executed LOI or letter of intent in which you just agree on both parties agree on the price. And then once that's done, at that time, you can reach out to the bank to request financing and work with the bank to find some loan structure that meets your needs. But, all that takes time. Just keep in mind, be patient. None of this stuff happens overnight. Next slide.
Yep. All right, yeah, that's talking buyers. If you're planning to sell, I don't know how many sellers we have on the webinar, but we may have some. What would you need to do in order to get your business ready to sell? One, think about what your succession plan is. What is your exit strategy, and sort of have staff pharmacists with that in mind. I mean, that's usually the best case scenario. I know Bo and I appreciate that scenario the most, just because there's less transitional risk. The pharmacist that works there, maybe the younger staff pharmacist, knows the operation, has experience ordering, knows customers. That would be ideal, but outside buyers are fine too. From a selling standpoint, seller needs to be able to show at least 2 years of profitability. That certainly helps. Got to get to that EBITDA number that shows it's going to cash flow alone. That's the number one thing we're going to look at. Majority of our credit decisions going to be based on the business and how it's performing. So, the expenses that personal expenses that have been run through the business year over year to reduce, your tax liability. You need to be able to show as you're getting ready to sell. That can sometimes, come back to bite you if you aren't able to show your business from a profitability standpoint. Add backs are fine. We have to use add backs. We do use add backs. We're very open to that. We want to try to get the most accurate picture of what the cash flow is going to look like post sale, but be organized with it and be able to communicate it from a valuation standpoint. It needs to be somewhat clear so we can get to that true EBITDA number based on your financials, your tax returns, and your most recent interim P&L. Have that team that we talked about, the industry specific team, very important. But then from the selling side, what tax implications? There are good companies to work with that can help limit and help plan for the taxes that you may have on the sale of your business. And then how does that affect, you can go to the next slide, Scotty, if you want to.
Sure.
Know the market value of your business. There's plenty of formulas out there, a lot of publications that are out there. A reasonable expectation helps a lot in terms of getting deals done from a selling standpoint. Everybody typically will think their business is worth more than it actually is, so we have to navigate some of those and are comfortable doing so with, it's basically black and white. This is the multiple that's used in this industry. Here's what the loan payment's going to look like for your buyer, and here's what we're getting from a total goodwill or prescription file value based on the multiples that are most commonly used. And there's other things that we look at in terms of trends and concentration, but typically 3 times your EBITDA is what your goodwill is going to be at. Know how financing is structured. That would be helpful as you plan, and it may you may have to carry a seller note. A lot of times on these bigger deals like we've talked about, where an SBA loan is going to require 10% equity on the total project cost for a buyer. If the total project cost is $3 million, we're looking for 10% of project cost, that's going to be $300,000. A lot of buyers aren't going to have that. There is a split that can be done if the seller is willing to carry a note on full standby. So you can reduce that cash requirement for the buyer by 50% if you're willing to carry a note. So a lot of times we'll use seller financing to make deals work. And then, if you own your building, would it make sense to sell it all, sell the business and the building all in one transaction, or you want to give the buyer first right of refusal and sell it on a different tax year? So those are all things you need to think about as you're planning to sell your business.
Hey, Drew, I'll chime in there real quick. On that, I think what you touched on is the seller needs to be reasonable. And I think what Alan was talking about earlier, we run into that a lot where, the chains come in and they give these people a number and they've got that number in their head. And that's not a real true indication of what the business is worth. So I would caution you of that.
Oh, very much so. They'll come in, and especially those that are commission based, trying to do a structure deal between you and a chain store. They'll throw a number out there to entice you, but yet after you take a look at the contract and the holdbacks and the reserves and the adjustments, those numbers sometimes are half of that. And you just need to be very careful that we see that very, very frequently. And independent owners get really excited up front and they don't read that detail or don't think about it, how it's going to impact them. It's a major situation.
You're right.
This slide here, pretty self-explanatory, but just touches on some things that are attractive and not attractive and looking for a pharmacy. We typically like to see revenues of at least $3 million with increasing sales and profit margins that are at least in line with industry standards. Obviously, a good staff, knowledgeable and experienced staff is critical. You want to make sure that all the expenses in the rent and lease are reasonable. And then if they're doing anything to differentiate themselves, whether it be specialty services or whatever, that's obviously a plus too. Not attractive, generally speaking, any pharmacy doing less than $2 million in sales is probably going to be hard to finance. And there might be some different scenarios depending on what type of business they're doing, but just a traditional retail independent pharmacy with less than 2 million, it's really going to be hard probably for us to find enough cash flow there to pay, excuse me, a market salary for a pharmacist and service any debt. Obviously, if there's a limited growth potential there, or if there's declining revenue or scripts, that's not attractive. If our rent's unreasonable or the lease terms are unreasonable, and as we talked about, a premium asking price is not attractive. And then lastly, we've talked about that, and we'll talk about it more probably. What are the quality of the financials? You're going to make sure if they've got outdated financials or stuff that's unclear or inaccurate, then that would be a red flag as well.
What's the pharmacy worth? Well, what a buyer's willing to pay for it. One, but if you got to have lending, then it's more what a lender is willing to invest. And so you want to make sure that you're talking to a loan officer and looking at the numbers, collaborating together to make sure that the pharmacy is worth what you're proposing to pay for it. And you want to do that on the front end before you get into LOIs and haven't done your proper due diligence to make sure that the pharmacy is actually worth what your offer is. So Bo and I enjoy working and doing valuations on the front end. Happy to do that. There's other transition teams that also will help with those as well. So I think as many eyes, I know you guys help with valuations probably too, Alan and Scotty. So as many eyes as you can get on your deal, the better, just because you want to pull from people that see and do this kind of stuff on a regular basis. But we're going to want to see that we have proper cash flow. Proper cash flow is usually a debt service margin of 1.3 or better. That gives you basically a 1-to-1 would mean that the business makes exactly enough money to cover all of its obligations. So 1.3 or better is going to mean get 30% cushion there. So the more cushion, the better. But as far as, if I was selling a store, I'd try to find that 1.3 debt service margin, and that's kind of what I would, sell it for, to have a buyer in that spot. So we'll look at that and take a look at it and go over it with you so you understand, and it can be very educational for you as you go forward as an owner. But you want to be able to make your reasonable salary and cover your debt without losing sleep every night.
This slide touches on what you need to look at to do a proper valuation. Number 1 and number 3 there refer to the financials of the business, and what that's going to do is show us what the cash flow ability of the business. We're going to look at last 3 years tax returns, year to date or most recent profit and loss statement and balance sheet. The second bullet point there just looks at some dispensing reports and other reports, but what that would identify would be any concentrations such as a certain drug or a prescriber or a payer that might be a red flag. And then, again, looking at all this stuff, how accurate is it? Is it written down on a napkin, or is it coming from a professional, and more importantly, a professional with pharmacy experience? Also, when analyzing these financials, you'll want to identify any expenses that are non-recurring or at the seller's discretion. Those would be considered add backs to that cash flow. Those are going to consist of personal expenses, like maybe a auto expense for personal car, insurance, or maybe they're paying a salary to a family member that's not even working in the business. You can move on.
Yeah, this next slide, we just pulled 3 of the most commonly used valuation formulas. We're going to use multiple of cash flow, the EBITDA. We're going to look at the total net operating income that the business produces and apply that to a multiple, usually of 3. We talked about that. So that's what we're going to spend, where we're going to spend our time, because we want to make sure you can pay us back and have enough money to run and operate your business successfully. There are other formulas: percent of annual gross sales plus inventory. If you say 20% of sales plus inventory is another way, that rule of thumb. There's calculators out there that would have something similar to that you can look at just to compare. Or you can, the chain method is we'll pay you do this amount of prescriptions per year. We'll give you $15, $10, $8, $20, whatever that, they're willing to pay. That's the way they're going to look at it, just a price per prescription. The next slide has some of these, has a typical independent pharmacy, or just looking at an example, and applies each of those options. But say the pharmacy you're looking at buying does $4 million in revenue, 65,000 annual prescriptions, and then has a normalized EBITDA of 315,000. So the way you get to EBITDA, just to sort of walk that through, say you look on the bottom line of the tax return and you see 145,000 in net income. So that's where you're going to start. You can also look up and see if there's any depreciation or amortization. In this case, 60,000 we're going to add that back to it. Say the owner pays himself 125,000, but bonus himself 50,000. So compensation of officers 175,000, and he does work in the store every day. We could add that excess salary back if we were trying to get back to a $125,000 market salary. So we would add any excess salary that's paid, a delivery vehicle potentially that's not actually used on the regular basis for deliveries, 15,000 in this case. And then say there's a employee that is getting paid a salary of 45,000 bookkeeping, but don't actually do a whole lot of work for the pharmacy, or maybe wouldn't be necessary, a family member, a son, a daughter, a spouse, that would be considered an add back as well. So all of that would get you to 315,000. Again, we're going to look at that EBITDA number, the normalized EBITDA numbers. In this case, 315,000. We would use a multiple of 3, which is about average. Sometimes they get higher if their margins are greater. Sometimes a little lower if the trends are going downwards from a count standpoint or revenue standpoint. 3 is about average, and that would be your goodwill number after you multiply that out, 945,000. And then inventory is typically done, right before closing. A lot of our closings take place on Mondays. Inventories are scheduled for that Saturday or Sunday right before, and so you're paying just for the inventory that's on the shelf, when you're taking over. Option 2 would be the percentage of sales of 4 million, and then option 3 would be whatever dollar amount per prescription, which is pretty easy to calculate. But that's not how independent buyers are mostly going to value stores. But those are, just gives you 3 different looks at it. It's not a bad exercise to complete, even though we're going to put all the emphasis on the EBITDA. It is good to know, what's out there in terms of other formulas.
Yeah, we also often get the valuation question quite a bit, so this is very good.
All right, I'll look at this one for us real quick, and I'll go fast. I know we're coming up on our hour, and I want to leave time for questions, but this is just a sample of how a deal would get structured. Number one, you got to know whether it's an asset purchase or a stock purchase. I would definitely have you lean on your advisors for that. The difference is the asset purchase, you would be establishing the buyer would establish a new entity to purchase the assets of that existing entity, whereas a stock purchase, the buyer would just be acquiring the stock of that entity that's already in place. There's advantages, disadvantages to both. Again, I would direct you to your advisors. This particular, as we mentioned, there's usually a 10% equity requirement. That would leave the bank financing the other 90%. And then it's important that we build in working capital so that you have plenty of reserves and that you're properly funded moving forward. Next slide.
And I would just add real quick, that asset versus common stock deal is a tremendously important issue that needs to be addressed by your pharmacy CPA. There can be some real advantages on that. Sorry to interrupt.
No, you're good. I absolutely agree. This walks us through what an acquisition loan might look like. If it looks like we're buying $945,000 in goodwill or patient files, adding $250 for inventory, and then we're building in another $175,000 in working capital and then closing costs are $30,000. That gives a total project cost of $1.4 million. And we've talked about this previously, but it's important to know when we reference a 10% equity injection by SBA, that is a total project cost. That's not just the purchase price of the business. So that would include that working capital and closing costs. So in this case, 10% of the total project cost is $140,000 coming down from the buyer. Seller's not holding anything. That would leave us with a bank loan of $1,260,000. That's probably going to be on a 10-year term, unless in this case, we're not buying any real estate. If there was real estate, we could extend that term up to 25 years.
And last slide before we wrap up new questions. This is just do's and don'ts, things that we would caution you on as you look to acquire a store. And I'll focus more on the don'ts, but don't limit yourself based on what's there. See potential. There's always, when the average age of an independent pharmacy owner is mid 60s, there's things that the business probably isn't currently doing that you could be doing from a marketing standpoint, from a business development standpoint. So there is a lot of potential, and if you're ambitious and a go-getter, you can really do a lot in independent pharmacy. And COVID the pandemic has especially provided a lot of different opportunities for those that wanted to take advantage of it. It's been, it takes hard work, but it's there. You don't want to pay for potential, even though you want to look and try to find potential of what you can do with it. You don't want to pay for it. You want to pay for the business based on what is in front of you. Don't be emotional. Don't get into a bidding war. Use sound, financial decision-making processes, and lean on the advisors that we talked about that are in this space, and let them guide you. You don't, independent pharmacy is not an industry where you want to overpay. You'll just be behind the 8 ball, and you'll be trying to play catch up, and there'll be too much pressure on the business. And that's where leaning on the right experts in our industry can be really, really beneficial to allow you to avoid some of those pitfalls. But for the most part, that covers it. Happy to get into other questions that people may have.
Got a couple questions here, Drew, but I'll just quickly mention on the dues here. Do understand those financials. I mean, you went over that financial slide, a couple of them there. You got to understand what's going on there in the books and the records. Does it make sense? Does it match the tax returns? Are things being adjusted accordingly, properly? What are the ratios? What are the KPIs in that pharmacy? So that's very important, in addition to that stock versus asset type acquisition can certainly make a huge difference in not only the purchase, but the purchase price and your future in that pharmacy. So huge areas there as well. We certainly appreciate you guys, Drew and Bo. We're coming up on the hour here, but we've got 2 quick questions. Is there a way to finance with 0 down? That's from Devin there. Is there a way to finance with 0 down?
So if you own, we just did sometime, and SBA allows it. If you own a store and you want to buy another store, and you're willing to pledge that store as a guarantor on the loan, SBA will view that as an expansion loan, and expansion loans don't require cash down payments. They don't require that 10% equity injection. So it'd be different than a change of ownership, I guess, overall loan. It would be an expansion loan. So that's the only way. Startups require 10%, change of ownerships require 10%. However, if you do own a store, you can leverage that store to view it more as an expansion and avoid that.
Keep in mind, if you do go that route, you've got to purchase that store in the name of the same company that you already have. Can't be a new entity.
And then the last question is, how do the EBITDA multiples vary for compounding only pharmacy and long-term care closed door pharmacies? Any comments there, gentlemen?
Sometimes they can be higher. Compounding, it certainly can be higher. You can get into the 4s, and other segments of pharmacy can get into the 5s. I know I've seen fusion deals get into the 5s. So it can vary based on what you're involved in.
I think the answer there, and I think you guys would agree, is if the gross margins are much higher than typical independent, then that multiple can definitely go up. And I think that really is the major answer.
That's
Scotty, real quick, the RX assessment, if you would, please.
Yeah, so if you are, we have an RX assessment here at Sykes & Company. So if you're a seller, for example, and you want to make sure your accounting records are where they need to be for potential selling down the road, for example, this service will take a third-party overview here of your current accounting and tax situation and give you some certainty as to where you are, what your accounting condition is, and any issues, concerns, or opportunities we see, and kind of give you a roadmap of the things we think you need to work on or address down the road there. So we do charge $1,495 for that service. And if you want to look into that further, you can go to sykes-cpa.com/intake form there, and we would be delighted to assist you any way we can there.
Well, gentlemen, we appreciate your time today. Appreciate you being on the call with us, and appreciate everybody on the call today and the questions. And we look forward to the next Master of Margin series.
Thank you, Drew. Thank you, Bo. Appreciate it, guys.
Thank you, guys.
Thank you,
Appreciate
John.
it.
Good to see you.
Okay,
Thank
stay
you.
well.
Bye-bye.